I had one of those days where it just it was not going the way that I had planned. By noon, most of my day I knew was already going to be scrapped. Bowen had to get a strep test or a strep swab. And then I also had to take Bowen to the dentist to get one of his teeth checked out because it was hurting him, and we're going away. And so, well, 3 hours just goes away like that, and before you know it, it is late afternoon. I have both kids, and the day has not happened the way I wanted to. And so be it. Everyone is safe, but it just reminds me sometimes how you have to go with what's actually happening. Which today, what's actually happening was I needed to step away from work and spend time with my kids to get them, in this case, to the clinic and the dentist, and then to pick up some antibiotics just in case. So you got to go with what's happening. Now, believe me, I don't always want to go with what's happening. I want to go with what I want to have happening or what I believe should be happening. And, as we all know, you don't need to be a Buddhist or you don't need to meditate, but the better we can be at going with what's already happening, the better it's going to be for our life. And there's no place better than that to practice that and to understand how valuable that is than in the stock market. Hey everybody, this is RC Peck, and this is my weekend podcast. It's episode 343. It is great to have you here. And the theme, or at least one of the themes this weekend, is the loneliest belief. Now, is the following belief actually the loneliest? Probably not, but it is certainly on the list of lonely beliefs. Beliefs that probably are true, but are not followed that often. And that belief that I'm thinking of or alluding to is the belief that we should follow the path of the price. And the price, in this case, we'll talk about the stock market today via the Dow Jones, and we'll talk about the bond market via bond yields. But we want to see which way, we want to know which way is the path of least resistance. And over the last 2 years, up to about a month ago, the path of least resistance was sideways. There was no path. The path was confusing. We are in a sideways pattern. And then the stock market, at least the US stock market, made a choice, and it looked like its path of least resistance was to the upside. Now, we had some signals because we have the market probability strategy. But it had given us 2 false signals before that. So we want to follow the path of least resistance, and we want to be prepared to be wrong. And so when I saw this red hut in Norway, or at least this picture of this red hut in Norway, that looked very lonely to me. And sometimes just the very simple idea of following the price, just follow the price, is a very lonely idea. Follow the price, follow the path of least resistance. So I want to show you 2 sets of charts that tell very different stories. And depending what your financial religion is, you will want to follow one set. And what I'm saying to you, and what I guess will say to you in this podcast, is your money is very clear on which one it wants to follow. So with that, let me show you the first price chart. The first price chart is the yield of the 10-year U.S. Treasury. So it made a bottom back in 2012. And the bottom in 2012 was about 1.45%. And just recently, a month ago, there was another bottom put in. It was a little lower this time, but not much lower. Let's just call it 1.4%. So a few basis points lower, but it was put in. And it had then moved up. Now, the reason I have this in here is because bottoms are hard to see when they're happening. But it is very likely that the yield on the 10-year Treasury has put in a short-term bottom. Has it put in a lifetime bottom? I do not think so. I think we will see the 10-year Treasury at 1% or below, but it may not be for another 6 to 12 or 18 months. But right now there is a bottom being put in, and it's very likely that this yield price, or the yield, I shouldn't say yield price because that will confuse people. it's very likely the yield would go up to kind of the 2.25 range. It's for this distance right here that it possibly could travel is about a 40% increase in the yield, which again could be around 2.25%. Now, the reason this is important because this is what the price chart is telling us. This moved down at the end of 2015 to about a month ago in 2016 for the yields of the 10-year Treasury. That was a pretty steep fall. And so it's very likely that the yield can move back up into this downward trending price line and then maybe fall from there. But right now it looks like the yield is bottoming over the short term, which means the price would go down on the bond, the yield would go up. Now, this is important because at the very same time, the Dow Jones Industrial Average has broken out to new lifetime highs. Now, not just the Dow Jones, the S&P has broken out, the mid caps have broken out, small cap has broken out, dividend producing, safe S&P 500 stocks have broken out to the upside. But what I love about this specific pattern, and you've heard me talk about this before, when you get something that breaks to the outside or breaks to the upside or breaks to the downside, and then tests that old ceiling, because this line used to be a ceiling, right? It was a ceiling back in 2015, couldn't get above it. And then finally the price broke above that ceiling and sat on it, and then the ceiling became a floor, and now it's moving higher. Now we'll get a definite confirmation when it breaks and closes above this point right here. But this is just such a beautiful formation, especially because right here, June 23rd was the Brexit vote, where the market fell 5% over 2 days, and then the market moved up 5% the following 2 days, meaning, hey guys, really not much going on. So what the price is telling us both in bond yields and equities is we have a confirmation here, and you want to follow price. Now, I'm telling you want to follow price. Now, maybe your financial religion says don't follow price, follow news or follow Zero Hedge or follow King World News or follow whatever, but not the price. And this is why price charts are so important, because your brain loves pattern recognition. And that's what we're looking at here on this price chart is pattern recognition. So this first set of charts, which is two price charts, one showing you the bond yield and one showing you the stock price, are both confirming with each other. They're both aligning with each other, and they're both saying, hey, the path of least resistance is higher. And that could be a very lonely thought or a very lonely idea for a lot of people who believe that the market should not be going up. After all, the price to earnings ratio, the as reported price to earnings ratio on the S&P 500 is at 25. Guys, bull markets do not start with a PE ratio, with an as reported PE ratio at 25. So this is not the start of a bull market. This market is moving higher because central banks have kept interest rates very low, which have allowed many corporations in this country to borrow at very low rates and buy back their share price. And it's the combination of those two that is moving stocks higher. Now, the second set of charts give you a very different story, and I want to show you these two price charts. So look at this price chart right here. This is a price chart showing you the historic price to sales ratio of the S&P 500. And I like price charts that go back, multiple decades. 100 years is a nice time frame, but this one's not bad. It's going back a quarter of a century or 26, 27 years. And when you look at it, and if you can't see it because you're in the car, but when you look at it, right now today, the price to sales ratio of the S&P 500 is right about at a 3 standard deviation, meaning it's 3 standards away from its average. That's a stretch, guys. And before this standard deviation of a 3, the most it got stretched was in like 2007, if we remember that, the peak of the stock market. And it had just a standard deviation of 1. And now we're at a standard deviation of 3. So if you're kind of following the news and information and not the actual price, you would not be getting into this stock market move, this break to the upside. You would not, because you'd be looking at it and saying, oh my gosh, this is very scary. The market's going to crash. The market's going to go down. The market's going to drop 50%. But in fact, the price of the market and the price of the bond market are saying something very different. The fourth and final chart, or the second chart of the second set, is showing you the price to the EBITDA. Now, EBITDA is kind of a weird term, so I'll tell you what EBITDA means if you don't. EBITDA is an acronym that stands for earnings before interest, taxes, depreciation, and amortization. Okay, so it's a way of measuring earnings of a company. Now, this chart also goes back 26, 27 years. And the standard deviation of where the price to EBITDA is today is at almost 3. Now, back in 2007, the price to EBITDA was at 2. The point is, if you're following information, and there's always going to be information to go counter, to be on the opposite side of the price is going higher, but it shouldn't be going higher. And I get that it shouldn't, but it is. And the price to earnings ratio is 25, which is a very, very large, big number. And bull markets do not start at a PE ratio of 25, but the market is going higher. And look, here's the thing. I heard people kind of talking about how Brexit was like a black swan. And if you don't know the term or haven't heard of the term black swan, it is basically a term that means an unexpected event. The unexpected event does not need to be negative. It is just an unexpected, untelegraphed event. For example, Donald Trump getting the Republican nomination was a black swan. Google was a black swan. Facebook was a black swan. I mean, you probably could look at any of the top publicly traded stocks in any country. Those are probably all black swans. I mean, they all had to start from somewhere. But the fact that Google and Facebook and Amazon have only been around 20 years or less, and they are 3 of the 5 largest publicly traded companies on the planet, that is a black swan. So I'm going to offer you one of my black swans. What if the black swan is that the market from here goes up 30% more? Right now, the S&P, what if the S&P went up to 3,000, S&P 3,000? I don't really follow the Dow. The Dow's right around 18 or 19,000. But what if the Dow went to 30,000? That would be a black swan. Now, I don't think it should go there. It doesn't mean it won't go there. But it's very likely the Dow could go to Dow 30,000. And then we finally have our comeuppance. And the market does correct 50% again. But it would just drop down to Dow 15,000. I mean, that wouldn't be that bad from a historical point of view. It would hurt many people's lives. And that's why you have to have a strategy that tells you when to be out of the market. So depending on what set of price charts your financial religion follows, you're going to have a very different view on what is going on in the market. I, of course, believe that we should follow the price, and the price tells us almost everything we need to know about what is best for our money. Okay, so what is the takeaway? Other than being very flexible when your kids need your help during the work week, and of course you drop what you need to do and go help them. So look, I think the takeaway is you align your money with the markets, not with your financial religion, not with the news, but you align your money with the markets. And what's going on right now is a confirmation is happening in stocks moving higher, not only in the US, but all over the globe. This coming Tuesday, I have my monthly strategy gathering. And there is this one asset that has been falling for 7 years, and it has just been killing people's future. Prior, you probably would have thought that was gold or silver, but this is an asset that is very large, that is very deeply undervalued to the S&P 500, and it is breaking up and out, and I've been waiting for this for some time, and so I will talk to you about that on Tuesday. But we're following the confirmation in stocks, and right now the price is confirming that the market is moving higher. And there is a bottoming in bond yields right now, not just here, but also in Japan. Is this the lifetime bottom of bond yields for the 10-year Treasury? I'm going to say no. But over the short run, 6 months, 12 months, yeah, I could see that bottom in at about 1.4% for the 10-year Treasury. Could we see it lower in the future? I think we will still. But there is a confirmation also in the bond yields. And then lastly is I'd love for you to follow the price and not the information. And that is one of the differences that has made a difference for me in my life, for my clients, for my members, what I continually show in my research. And if you find yourself not understanding how to follow the price and you kind of start to see yourself wanting to align your money with your beliefs or your financial religion, then it may be time to take a hard look at your strategy and your approach, because I do believe we have one more big correction in front of us, even if the market goes up another 20 or 30% from here, and then falls by 50%. Hey guys, thank you for being in my life. This is just another step in helping you protect your future and your portfolio. Until next time, this is RC Peck. Hey guys, I mentioned it a minute ago. On Tuesday, I have my monthly strategy gathering. I love doing these. One of the things I love about it is I'm going to show you the best sized stock on the planet. Because as you know, I do not believe in diversification. Diversification is a tax on your life, on your future, on your choices. I'm also going to show you the best type of stock on the planet right now and the best location to invest in. So it's pretty cool. We cut through all of the noise, and literally in minutes, and you watch me do this live. I do this live. I show you the best size, the best location, and the best type. And then and just these don't move that often. And so when they do, it is actually a pretty big deal. If you do not have access to my research, you can get access to it for this Tuesday. You can either email Patty and say, get me access to RC's research, or you can just go ahead and give her a call. I personally like talking to people on the phone. Thank you guys for being in my world. You guys take care, and I will speak to you soon.